So the fourth and final thing lenders look into is what so many people I know seem to worry about nearly the most. But in my opinion, it's truly one of the least important aspects here, and let me tell you why. This, of course, is assets. In case you aren't familiar with what the bank thinks assets are, no, it's not your car, your boat, or your Gen 1 Pokemon collection, but it's defined by items that are easily liquidable and can show value immediately. This includes your current bank statements, such as checkings and savings accounts, as well as retirement accounts such as a 401k, annuity, IRAs, and sometimes even pensions if you can draw from them. It would also include any stocks that have value that you currently hold and could easily sell for real cash. Ultimately, there's no specific hard number that they need to see here, but a flexible one depending on your loan product. They would like to see if you have money for the down payment, which can be as low as 0% or 3.5% down depending on the loan type. They also want to know if you have the closing costs, which can vary from lender to lender. You could estimate this to be between maybe 2 and 4% of the purchase price on average, but I would suggest that you talk directly to the lender to find out what some of their costs may be and how best to prepare for them. On occasion, lenders may also require that you have some additional funds in reserve after closing, because they don't want you spending every single dollar you have to get to the closing table and then be suddenly faced with a deficit and unable to make your first couple mortgage payments. This is not always a requirement, but sometimes it is based on the risk factor. The reasons why I feel this is actually the least important topic is because of the following. Number one, this number is largely determined by the sometimes flexible percentages of what you plan to put down based on the purchase price of the home. Number two, there are sometimes opportunities for your realtor to negotiate seller concessions into the deal where the seller actually helps to pay some of your closing costs. Number three, there are a handful of different programs and products out there that can actually help provide down payment assistance, sometimes based on the percentage of the purchase price or a fixed amount like $10,000 for example.